In the investment world, private debt is often represented as a subsector of private equity. It is mainly due to its focus on one type of asset, the debt. But debt covers a very large variety of investment strategies, of instruments, and of industries. It goes from direct lending to venture debt. It provides financing to large companies or to very small ones. It can be backed by infrastructure projects, real estate. It's flexible enough to address special circumstances or even distressed situations. A niche market? Not at all. Private debt is not a marginal asset class. Since the financial crisis, the private debt market has been booming. It is now flirting with $1 trillion of assets under management. In Luxembourg alone, the market grew by 41% last year. 2021 was also the second best year of fundraising, which let us believe that there is still a huge potential of growth. Like private equity funds, managing a private debt fund requires a lot of expertise. But private debt has its own specificities. The first challenge is to set up the right vehicle. Do I need a fund qualifying as AIF? Would a securitization vehicle suit my strategy, especially with the latest update of the Luxembourg law? This vehicle may be considered even more than before. Should I include a debt holdco in each of my geographies of investment? The second challenge is to address properly the risk and objectives of the investment strategy. Each private debt fund is unique. Private debt covers a very large spectrum of investment strategies. It can be about originating loans to be held to maturity, opportunistic trades on secondary markets, yield enhancements. It includes CLOs, unitranche, mezzanines. The risk-return profiles are very diverse. In that perspective, valuing the investment portfolio is not an easy task. Or to determine the fair value, should I apply a market yield approach? Would amortized costs be a better approach? Managing operation along the lifetime of the fund can be challenging. First, ESG is already on the agenda of a lot of players. More than 1/3 of the market elected for Article 8 and some even chose for Article 9 of the SFDR classification. I can only expect further development in sustainable investing. Then, the second draft of the AFM directive, especially with the introduction of a regulatory framework for loan origination, will somehow legitimate private lenders and recognize their contribution to the economy. But at the same time, it will introduce new restrictions. The market will have to adjust. Eventually, private debt is an asset class which adjusts to its environment, so there will be a close look at macroeconomic trends, and especially inflation. To know more about private debt, join us from the 17th to the 21st of March for our private debt module of the LPEA Academy. I am Marie-Laure Mounguia from EY Luxembourg. Thank you for watching.